and productive discussion. So today, I think we are moving into a very important discussion at a critical point, innovative financing for development. What's happening in the world is, in the past, like a lot of investors, stakeholders were using typical old conventional way for development and trying to scale development. I think the landscape has changed. The emerging market, the governments doesn't have money, they don't have the fiscal space. And so the only option is either private sector, PPP, or hybrid solutions between government and private sector. And in those cases, when the private sector go in a conventional way, overall it becomes so expensive that it's very difficult to the project to be bankable. So that's why the need for innovative financing, blended finance, reforms, all these things came into place. And the challenges has been increasing. In the emerging market, specifically Africa, there has been a bulge of youth population. So the development challenges are how to provide jobs to these youth, to dignity, empowering women to be in employment, providing basic necessity service, water, electricity, facing challenges like climate. So we want to do a very productive discussion, and I have a very diverse panel, and we'll get point of view from different angles, from development finance world, from peace, and from UNDP. So let me now invite my panelists, and I want to invite first our co-host. We are co-organizing it with Qatar Fund for Development, and Qatar Fund for Development is now moving into a very important phase on developmental and being a catalyst on development. And let me tell you, I was with Mr. Fahad Al-Sulaiti during the spring meeting, and I was on the table on many roundtables, and I saw the passion. I saw his involvement, attention to details, and he came up really in those meetings a contrary view on how things can be done, an innovative view. So that's why you will enjoy this discussion. I've seen his views, how he come up with a very different views and very different angles. So first of all, I would want to invite my friend Mr. Fahad Al-Sulaiti, Director General of Qatar Fund for Development, who has been leading QFD evolution into a more catalytic, partnership-driven institution at the forefront of Qatar's global development and humanitarian engagement. Mr. Fahad. Now, next, Mr. Remy Rioux, he's CEO of AFD, a key architect of France's development finance agenda and a long-standing champion of climate action and innovative partnership to advance SDGs worldwide. Mr. Remy. We'll hear from him from the angle of development world. And then Mr. Itonde Kakoma, President and CEO, INTERPEACE. He works with the INTERPEACE, and he will give us a good perspective on peace financing, which is a new concept. Not many people are aware of this concept. Mr. Itonde Kakoma. Last but not least, we were supposed to have Mr. Alexander de Croo, but for some urgent meeting, he won't be here in personal, but he will be here virtually. Mr. Alexander, administrator of the UNDP program, who will provide us with a video virtual inputs, who oversees UNDP global work with governments and partners to strengthen institutions, expand opportunities, and unlock sustainable financing for development. So let me now start and place a couple of questions for Mr. Alexander, who will be attending virtually. The UNDP has been leading global efforts to help countries and build stronger enabling environment for investment. What policy and regulatory reforms do you see as most critical for reducing risk and attracting private capital into least developed countries and fragile economies, particularly for sectors like agriculture, digital economy, etc.? What are the most promising opportunities for joint action between development partners such as UNDP, QFFD, multilateral banks, and the private sector to co-develop scalable financial tools and advance economic inclusion and build long-term resilience. I think these problems are so huge that one single institution cannot solve these problems. So the partnerships between different stakeholders from different parts of the world are required. So now we'll see a video, Mr. Alexander responding to these questions.
Distinguished panel members, I regret I cannot be with you in person today, but I'm grateful for a chance to contribute to this important discussion. Let me start with your first question on financial instruments. We live in a world where wealth is over $600 trillion. Yet developing countries face an annual $4.3 trillion gap to achieve the SDGs. In almost 60 developing countries, more than 10% of government revenues go to debt interest payments, leaving less money for schools, hospitals, and sustainable growth. This is not a story of scarcity. It is a story of misalignment between capital and need. At UNDP, we work on partnerships and financial tools that can change this. Different partners, from export credit agencies to private investors. Since 2022, UNDP, together with the countries we support, have catalyzed over $870 billion in SDG-aligned finance. Consider Mexico, where SDG-linked bonds have raised over $21 billion for climate action, gender equality, and beyond. In fragile contexts such as Somalia, Yemen, and Sudan, UNDP is supporting digital IDs and payment systems to rebuild the foundation of local economies, even amid crisis. UNDP also hosts the financial centers for sustainability that help to align the operations of financial actors with SDGs. In the entire financial industry, digital and AI help to reduce costs and strengthen transparency and investor confidence. UNDP is helping to embed those tools into national financing systems to work more efficiently. Think of standardizing project preparation, reducing transaction costs, and building market trust. Technology also needs national architectures that integrate data regulation ministries, allowing digital solutions to scale. This is exactly what INFFs can provide, with partners like the Qatar Fund for Development providing vital support. Yet, in the end, this is not about technology. It's about people. A farmer with the means to rebuild after a flood, a women entrepreneur who can hire new workers, or a government investing in teachers rather than debt service. When partners come together, we are not just funding development. We are giving every person a fair chance to thrive. And in that spirit, I wish you a most productive discussion.
So Mr. Alexander mentioned the gaps SDG to meet SDG is $4.3 trillion per annum. And he also mentioned about partnerships. How important is the partnership from all angles, development financial institution, sovereign wealth fund, development agencies, and partnership with the governments as well. And also he highlighted that the fiscal space is so low that government doesn't have the money to finance hospitals, education institutions, basic services on electricity, water. So these are huge gaps. In like one example is that in Africa, 50% of the household does not have access to electricity. And when you don't have access to electricity out of $1.2 billion, only 1.2 billion people, only 600 million people have access to electricity. And when you don't have access to electricity, everything, whole development angle comes down. So now, and what I will do is we'll have two rounds of questions, and then we'll have time for open Q&A from the audience. So now I will go for His Excellency, Mr. Fahad Al-Sulaiti. And under his leadership, under his vision, we have seen major changes in approach in QFFD. And QFFD has been transitioning from a traditional donor to a catalytic partnership driver sector. So I would ask Mr. Sulaiti, how is QFFD reshaping its approach to financing to unlock greater impact, particularly in fragile and least developed countries' context?
Thank you very much, and my friend, really thank you for the introduction, and we are pleased, to be here with the AFD and our friend from the Institute of INTERPEACE. I think Doha Forum shows that not only Qatar Fund for Development is moving with this, transforming, our mandate, but we believe most of the funds now is moving on this from a traditional way to a new way that we are implementing the innovative financing. I think the issue is that really is scaling, and what we need is how can we have very innovative solutions that have the scaling, to move forward from what we are doing today, because every day we see the data, we see the gap is increasing, is not decreasing. Education and health, economic empowerment, electricity, as you just mentioned, the gap in Africa only is exceeding 90%, that the continent, don't have electricity, this will never bring peace back, will never bring security back, will never bring, a good impact. The GDP always will be very low because they're not utilizing well, what is natural resources that they have and can be well utilized. And we will never, the aid will make good countries, rich countries, and never this will move, if they keep depending on the other countries that can be supported. Most of countries have a huge burden on the loans now, and we have seen, I'm sure, IFC and the World Bank, together, we have seen what the recent situation after COVID, where countries are suffering to pay the debt, and this is something that I think is not acceptable. So what are the solutions? I think the main things, and we'll keep talking about, is the private sectors. I've been meeting with a number of ministers and president, during Doha Forum, and everyone is really taking this approach now, taking the things. We have seen most of countries now moving from government schooling, to be depends on the Ministry of Education. Now we can see a lot of private sectors, have big investment on schooling, on hospitals, and other way. So for us, I think what we need is really the new way of supporting the LDC countries. Last week we had huge meetings here for graduation for countries from low-income countries to be mid-income countries. Qatar really taking a huge step on this. We've been working, with the United Nations on that for 5 countries now, and we hope by 2027 we'll see these 5 countries really being upgraded. Why? Because they have taken the steps. They have really working very close, with us and with other ODA to take this step and to move them, from where they are to. But we have asked, that some of the mid-income countries are losing, some benefits, which is we need this long transitions to be there, from 5 to 10 years, that within the World Bank and other ODAs, will keep giving them the same rate that they have received, during they are on the LDC. I think this is something that we keep focusing a lot on it. We've been shifting a number of our commitment from, as you mentioned, from the traditional financing. We have signed with Bill Gates Foundation 500 million commitment, co-financing together. We used to work with them before on the grant base. We have moved now in a very innovative financing mechanism in health, agriculture. But I think the most important things that we need to talk about is how to transform the energy side, because energy is really being affected a lot, not only in Africa, but either in Arab region. We're working now with Iraq, with other countries, and really increasing the capacity of the electricity. And we believe strongly that this is the future that we should depend on. Thank you.
Thank you so much, Mr. Sulaiti. And I think I can see your passion on the energies. I remember the roundtable was on water, and you are the one who raised this issue that how important electricity or energy is. Without electricity energy, you can't even pump water. So, and that was, I think a lot of people appreciated that during that roundtable. And also you mentioned about the way you are changing in terms of catalytic financing. I think it's a step in the right direction. We'll come back to you for the next question. Now I'm going to Remy Rioux from AFD to hear from him on from the perspective of development finance world. And specifically, AFD has been at the forefront of blended finance and impact-driven partnerships. So it will be good to hear from you what innovative tools are proving more effective in mobilizing capital at scale for sustainable development. So there is a wide array of innovative financing, blended finance, junior equity, viability gap funding, a number of, so it will be good in terms of your experience, what is working, what is not working, and so it will be interesting to hear from you. Thanks, Mr. Remy.
Thank you so much. Thanks to the World Bank Group and especially IFC, Ahmed, my dear friend Maktar Diop, and to you, Fahad, and the Qatar Fund for Development for the invitation to this discussion this morning. My answer to your question, it's not a paradox. I think to mobilize private, you need public development banks. So it's very plain and simple, and that's my experience for a decade as the CEO of AFD, which is the International Public Development Bank of France. So we worked a lot, and we have identified a group of institutions that are, of course, independent financial institutions that have their own balance sheet, legal entity, but they are owned by the public. And they have a public mandate. They have a specific mandate, which is, of course, now aligned with SDG, searching for impact, and mostly non-profit. I mean, they are, of course, they are managing their balance sheet. They are robust, but they are different from commercial banks or even other public institutions like sovereign wealth funds. We did the research. We published in February this year a reference book with all the details. There's a database online. We have found 550 institutions following these common features. It's huge. I mean, it's about trillions, like Alexander de Croo was expecting it. We estimate about 2.5 trillion investments a year. So you know the international multilateral players, first and foremost the World Bank, but also the Islamic Development Bank or the African Development Bank. AFD is also a pure player of international cooperation on behalf of France. But maybe more interestingly, I'm not sure you know all the regional, national, sub-national public financial institutions existing in the world. The research helped us remove I would say, the stigma that was attached to this institution for a long time. They're not perfect, but I mean, who is? And we know how they can be governed, how they can follow the right methodologies. They are our clients at AFD, for about 100 of them. So, and IFC know them as well, very well. They are diverse, they are capillary, and they are serious. And they are feeling part of a community sharing the same mission since 2015. In Qatar, you have the Qatar Development Bank, if I'm right, that is not generalist, but mostly focused on SMEs financing. I'm very pleased to hear my friend Fahad and the Qatar Fund for Development, if I'm following you right, somehow turning into a fully fledged financial institution. Not only provide, of course, public banks can manage grants on behalf of the government, but they have mostly, let's say, refundable instruments. And of course, a public development bank can have the full array of financial instruments, from equity to guarantee, to grants, to all types, and find the right instrument for the right end. So Qatar, the National Development Fund of Saudi Arabia is also one of them. You know QFFD in Germany, that is both domestic and international. You probably know BNDES in Brazil, at the heart of the Brazilian experience. You know SMI in Indonesia, DBSA in South Africa. So it's a vast architecture of public development banks. And to answer you more specifically, Ahmed, again, it's not against private, not at all. Maybe there was a bit of a competition in the past, but the new mission, the new positioning of the public development banks is really to unlock way more private investments. First, well, it's obvious, but by issuing bonds. I mean, the easiest way to mobilize private capital is to issue bonds on the market. So for now, you have about 100 of the 550 public development banks that are issuing bonds. We launched in Belém during COP30. We called it with MIGA PDB Guarantee Hub. So we will guarantee and we will accompany hopefully 200, so doubling the number of public financial institution issuing, of course, sustainable green bonds, quality bonds, let's say, on the market. That's on the liability side, the easiest way. Of course, we can do a lot on the asset side. So I will not be technical here, but first loss tranches, anchor investors in various funds, B loans, secondary markets, so CLOs. IFC knows that by heart. But this group for a decade has been very innovative. And we have a lot of pilot, we have a lot of experiences that now needs to be scaled up. We have a subsidiary within the EFD group called ProParco. It's mobilizing $1 for $1 of public. So we're doubling our own investments, mobilizing private finance, and we hope to do way more. If I'm right, Ajay Bonga wants IFC to do it 4 or 5 times more than your own balance sheet. So these institutions have become, let's say, enabler for the mobilization of private finance. And I close by saying for your attention that we have gathered all of them in an initiative that is called Finance in Common. It started with summits. In 2020, it turned into a system. So we called it FIX, to fix it, Finance in Common system. So you please pay attention. We're all gathered. And of course, it's not a pro-domo manifestation. It's really to liaise, open all the synapses with willing stakeholders, civil society, governments, and private players, corporate and financial. And maybe two innovation also I want to highlight. Carbon markets. So you know we waited for a long time for the rule book of Article 6 of the Paris Agreement. Now it's on the table. The European Union is putting its bulk in the system in its new NDC that was approved just before COP30. There's a public component that was missing in the carbon markets. I think this institution will come and make it more, provide the integrity that is needed and animate the market. And second, I want to highlight the role of datas. We know the risk perception of many countries is too high. We have in our books a lot of data on very good investments we did for a long time. There's an initiative called GEMS, between the multilateral development banks that is now way enlarging to other institutions to give the private sector data to better measure the risks. Thank you.
Thank you, Mr. Remy. Rioux, I think very interesting perspective. You mentioned about a very interesting research. I think it will be good for all of us to go and see what are the findings of the research and how that can be can help in the development agenda. AFD and Proparco has been a great partner for IFC and World Bank Group, and we have been working in very, very difficult markets. And you mentioned, of course, importance of private sector, how private sector can play a role, and especially these innovative tools, and you mentioned a number of tools, because now in the previous model, if you give $1 donation or as a donor, the impact was $1. Now with these tools available, the impact can be from 5x to 20x. So your $1 value or $1 power is much, much higher. And that's exactly Mr. Fahad is trying to do. Now I will move to Mr. Kakoma to give a very different perspective. Especially we'll stay at the theme of scale impact through collaboration. But when these development challenges are not met, if the youth does not get employment, if you don't have the basic rights, electricity, water, that creates a lot of social issues in the country. And we have seen in the region and outside the region example of issues on Arab Spring and other when these services were not provided, when jobs were not provided. So it will be good to hear from you, especially from your perspective, that how sustainable peace contribute to long-term economic growth and development.
Thank you, Mr. Moderator, and a deep word of appreciation to His Excellency, the Director General Al-Sulaiti, for the partnership, friendship, and vision to advance this discussion. I must say that Doha, in many ways, is leading the charge, yes, on innovative financing for development, but simultaneously leading the charge on a sustained investment in peace diplomacy. Within this week alone, less than 7 days, we saw a signing of a peace agreement here, just prior to the start of the Doha Forum concerning Colombia, just 48 hours prior to, in Washington, concerning rapprochement between Rwanda and DRC, within less than a week. The transformative aspect we're talking about is how the leadership on innovative finance links to, or is inextricably linked to, peace diplomacy. This is where we begin to speak about transformation and breaking the cycles of conflict that we see in insurmountable ways at times. I'd be remiss if I didn't say a few statistics. We've heard on the financial side and the gaps. Let's speak about the peace side. In the last several years, and I have distinguished colleagues here who are tracking these kinds of trends, we've seen the highest number of armed conflicts in more than a century, and they're increasing. This year alone, ICRC, for example, documents 160. It's an increase from last year. And yet, we see the gap as well in terms of a sustained investment in the very things that address the drivers of conflict cycles. There's another aspect of this that I would wish to highlight amongst many, but I'll before getting to the question of peace finance. Many of these conflicts are not new. They are cyclical in nature. They are intergenerational in the way in which they play out. That is to say, fundamental root causes, drivers of conflict are not addressed. What happens? They show up again, perhaps in more volatile ways, which then gets to the discussion for today in terms of innovative financing for development. Peace is central, unequivocally so, to development finance, and specifically addressing the challenges in enabling development finance to get to scale in a sustainable manner. And here, I'd be remiss if I did not also emphasize that sustainable peace directly contributes to the reduction of systemic risks around volatility, weak institutional systems, to enable the kinds of investments that many are ready to embark upon. And so in a sense, one could argue that peace is a de-risking mechanism in and of itself by reducing the barriers that impede private sector investment and market formation. So, you know this far better than I, investors are looking for predictability, enforceable contracts, functioning institutions and social cohesions, the very things, Mr. Moderator, that IFC invests in. But conflict erodes all of these basic things, making capital more expensive, short-term, and extractive rather than productive and sustained. Peace building enables markets, lowers risk premiums, and increases the tenure horizons in this respect, making blended finance viable. So we've heard considerable references to the types of mechanisms at play. But in fragile settings, we also know that these instruments can only perform if peace building is a part or embedded in the underlying architecture at the earliest stage of design and not as an afterthought. That is, if it's not at the design, they are short-lived fixes that collapse under the types of almost predictable political and social shocks that emerge. And to this end, we look at peace as risk mitigating rather than a parallel sector, enabling economic transformation. We've referenced in terms of agriculture and sustainable extractive industries and employment, very job-intensive sectors, revenue-generating and scalable in fragile settings. However, the very same sectors are oftentimes at the heart of conflict drivers. So then, this presents the opportunity. Investment in these sectors is successful when conflict risks are more fully understood and addressed fundamentally from the point of view of communities who stand to benefit the most, with institutional, national ownership strengthened. As a principle of a peace-building organization, I should also say to you, we need to be asking ourselves very hard questions. Why is it that so many peace agreements, I'm sorry to say, aren't sustained? I changed my words to say fail. Why? Because we haven't been having this level of strategic conversation between the innovative financing for development side and what makes for sustainable peace. And one of the reasons why peace agreements don't sustain is precisely because it remains on paper. It's situated in an elite settlement alone that's necessary to create conditions, but doesn't fully capture the benefit of communities impacted by conflict who stand, again, not only to benefit, but serve as champions, as visionaries, to bring forward the kinds of investments that we're speaking of. I'll end here with final observations. Long-term resilience and inclusive growth depend on more peace-responsive systems, because this is also about an investment in resilient societies. We have experience as a peace-building organization working with international development financial institutions who are saying for the last 5 years, 6 years, we've had considerable amounts of capital ready to be invested, but we're unable to do so. Why? Because of the conditions on the ground. And so there is a newfound partnership. Again, I must commend the leadership of the Qatar Fund for Development to really look at it from a paradigmatic shift in how not only sustaining peace requires an investment in innovative financial solutions, but similarly, creating the fertile ground for innovative financial solutions requires that investment in peace. These are not separate conversations, but inextricably linked. I thank you.
Thank you, Mr. Kakoma. I think you came up with a very interesting overall journey. And usually when we discuss on the financing side, we discuss a lot of these development part, but we miss this angle. What is the, and you took us from the journey development, what is the link between development, conflict, and then sustainable peace, de-risking. So it was very, very interesting that although one doesn't look into from this angle, but how closely linked these events are with investment. So I'll come back to Mr. Fahad Al-Sulaiti, especially now you're doing increasingly work in solving employment or job issues, agriculture and sustainable extractives. How can, in your view, innovative financing models connect these sectors to create scalable country-level transformation? Thank you.
Thank you very much. I would like to really comment on the piece. I would call it issue, sometime, because we are sometimes struggling, on that things. For example, that Sudan today, we are really struggling because we need to move on this very innovative solutions on the financing mechanism, but the situation is really very difficult for us to move on that things, especially with this conflict. And it's keep us struggling, not only Sudan, but from Sudan to Gaza to Yemen, and also our neighbors. We need to react as the fund, not only us, either from GCC or sometime we see, our friend like AFD today will be signing with them, for big contributions coming to Palestinians, and this is one of the commitment that both, together with us and AFD is doing these things. So for us, really. The angle of peace should be looked at in a very, very serious ways. I think the issue that we have today, and we'll be talking here today about the governance and the broken governance on the world, because we don't have, I think we have very strong laws, and the laws is already there, national and international levels, but I think the implementation is really suffering, to take this on the big accountability from security councils and others. But what I want to emphasize here is that we want to move for really huge development side, but unfortunately, the reality is really very difficult. That's why, I was thinking to invite to this panel our friend on the peace, because really linking this, that's why I was mentioning in the beginning of my statement today, peace and security is the key things, to move anything forward. I just will give small examples for coming to the employment and scalable and all those things. Now, I just came from DRC and Rwanda on the negotiation. I just visited the two countries. We are entering now in a huge commitment for this gateway for minings and electricity and agriculture, where we're creating a huge number of jobs through this pathway, through this new projects. And actually, what's encouraging, the two countries to come together, because we're creating this pathway that we want to do together. And this is really encouraging, other countries that want to do the same. We are really in discussions now with a number of countries. As we stated today, Qatar is playing a big role, on the peace negotiation, and always the fund is part of that contribution together. Thank you.
Thank you, Mr. Sulaiti. So I think in the interest of time, if we can be a little brief so that find time for at least a couple of Q&As. So Mr. Rioux, I think now we have taken a full round from development to peace to innovative products. So AFD has emphasized the role of public-private collaboration, especially public-private, to close financing gaps. So what is required politically, financially, and institutionally to make blended finance work more consistently in vulnerable settings, especially your experience in working with more vulnerable countries?
Thank you. I want to thank Itonde and Fahad for, of course, we need to mobilize private capital for climate and global public goods like never. That was the first round of question. But yes, you remind us that there's a group of countries that is highly vulnerable. We know the poverty and vulnerability trap where, I don't know, 50, 60 countries in the world are, and the need for a specific effort for these constituencies. I signed yesterday the strategic agreement between ICRC and AFD. We have a very strong partnership on this, we call it nexus, between humanitarian and development, and I know that the Qatar Fund for Development is doing both, which is extremely interesting because we know that if we do not come at a time in refugee camps to invest in waste management, in energy, well, they're going back into the crisis. So there's a specific effort that is now happening in our institutions about it. And I want to stress here that, of course, what is happening to ODA for the last few months is tragic. Because we see the system reconfigurating with, of course, pure humanitarian on one side and investments on the other side. And there's nothing in between. And so there's a risk that the divergence between emerging economies and these 50, 60 countries I'm referring to will widen over time. So I really think, so of course we know the reasons why ODA is dwindling, vanishing from view somehow. We know this framework dates back to the 1960s, so it's no longer consistent with the affirmation of national sovereignties. We know the world is different. We know we have to turn from assistance to investment in terms of narrative. But really we have to pay attention to this pot of public concessional finance that is so precious and so important. So, of course, good news, the Gulf states, especially Qatar, you had the social summit, the WISE summit, so you keep repeating that about the social dimension of the transition, which is so important, including for climate, and especially in poor and vulnerable contexts. I think Europe is still there. With the European Commission, I see Jean in the room from Belgium, put a very ambitious proposal for the multi-year budget last July. I hope the member states will support. And France, as you know, will head the G7 next year in 2026. Of course, we will discuss, President Macron just came back from China, so we will discuss global imbalances, which is a very important issue. They are widening, but we need finance, development finance, to correct global imbalances for those that are the most affected by turbulences. And so I hope that next year, with all willing partners, we will be able to advance in the definition of, let's say, a new framework that would replace, because it's urgently needed, the old ODA framework, but that would help unlock this twin mandate for a pot of finance protected for the most vulnerable, while we are also allowed to allocate part of the precious concessional resources for guarantee, to unlock private investment everywhere we can spare CO2 emissions, let's say, for the sake of humanity. So we're all searching for this, but we need at a time our leaders to reset the framework and the ambition, and then of course the methodology, the tools, the innovation we were describing will speed up. I'm sure of it. We have all the elements on the table, but we need clarity and we need a bit of of course, I'm saying that we know the headwinds, we know the tensions, but let's give it a try. Thank you.
Thank you, Mr. Rioux. So I'll finally go to Mr. Kakoma. And if you can share your experience in terms of INTERPEACE approach to peace building, how INTERPEACE approach for peace building has evolved to address the complex challenges of today's conflict? And how can innovative financing solutions play a role in negotiations efforts?
Thank you, Mr. Moderator. I'll be very brief with my points. Let me start with an overarching one. Peace building has suffered, I would say, from a more projectized approach, isolated. What we're talking about now is the ability to get to scale in a sustained, transformational way. This is the shift, fundamentally, that we are embarking upon as an organization. To move from a projectized notion of peace building into a transformative one that is central to national ownership. Furthermore, I think it's so essential just to say that peace building, the investment in peace, is perhaps one of the most undervalued enablers of long-term economic growth. And the lack of investment in peace, no amount of innovating financing will close that development gap without an investment in peace. And here I would conclude by saying that transformative finance is possible, but not in unstable systems. To get to scale, resilience, and inclusion, looking at peace, investing in peace is foundational to economic infrastructure itself. This is how we are transforming as an organization, and we welcome this shift, but in a systematic, joint strategic way under the leadership of those here today. Thank you.
Thank you, Mr. Kakome. So quickly, just one or two questions from the audience. I think Mike will come. Can you raise your hands? Yeah. There are a number of questions. I don't know how much time we have. We have overtime already, which seems that it has been a very interesting discussion, and audience have participants have a lot of questions. I think we'll take a couple of questions together, and if you have questions to a specific speaker or a general, just mention that.
Thank you.
Thank you very much. Question for His Excellency Fahad Al-Sulaiti and His Excellency Remy Rioux. From the perspective of innovative financing solutions in the past, can you think of any examples within the public health sphere where such solutions have been applied, and what challenges might have been faced in those examples? Thank you.
One more question.
Yes. Hi, everyone. Thank you so much for this wonderful panel. My name is Dylan Pereira. I'm from Venezuela. I am developing now a think tank based in peace building and reconciliation with young people as the drivers. But I would like to know your perspectives and opinion about the role of the civil society organizations and how your own institutions support young people and civil society organizations to support this peace-building process that has actually sustainable impact in economic development, as well as we have been listening this morning. Thank you.
One more question and then we...
Good morning, everyone. Thank you so much. This is Brukas Chalo from Ethiopia. I enjoyed the discussion. I work as a president in a youth association in Ethiopia. And I was wondering if there is any opportunities to partner and to work with your organization in local grassroots level, or also opportunities to co-create programs that focus on youth and women also. Thank you.
Yeah, thank you very much. I will take the first very quickly, the first and second questions for the innovating or financing. As I just mentioned, we have signed an agreement with Bill Gates, for $500 million. Two-thirds of that commitment is going to a very innovating financing for health sectors. We need to create a hub inside Africa. One of this is we are doing, inclusive manufacturers inside inside Rwanda. This is something that we are in discussions now, where we want to create a strong ecosystem inside Africa that can, have facilitated processing, the whole process from zero to the end. I think this is a very innovative solutions, because will give the ecosystem starting, generating revenue, and let the continent, depend on themselves. For the resilience and the young peoples, that we want is, again, strengthening on the private sectors. And the very important things is the MFIs. We need to strengthen the MFIs, the small banking system. We need the strong financing that could work very well. And through that, we can work either through ICT sometime, mobile phone, which is most of Africa's now, most of Latin America's is using this, So the small enterprise entrepreneurship this is the futures we believe that could be strengthened, all right, and creating jobs, because we cannot just keep depending on the governments. We need to create jobs through the private sector, through entrepreneurship. There are huge opportunity that utilizing your natural resources for that, and you can move forward on that aspect.
To follow your point, Fahad, yes, we invested in Bank of Palestine, for instance. So we are turning grants or concessional resources into equity, and Bank of Palestine is so important. It's about more than half the market, and through mobile devices, it provides, an essential services to the people in Palestine. We also have a lot of experience about debt swaps, for instance, for social sector. So we will sign with Fahad a very nice program for the Saint Joseph Hospital in East Jerusalem later today. So it's not financed with debt swaps this time, but could be in the future. And on civil society, we have a long experience at AFD to channel resources and to support first the French civil society internationally, and recently we opened these instruments to local NGOs, could be in Ethiopia where we are operating, or in Latin America. They are called for projects regularly from AFD. You could answer, and more broadly speaking, this fix finance in common place I described you rapidly in my first remark has been open to civil society, for Rioux, Climate Action Network, from day one. So civil society is in the governance of the initiative itself and providing very important, significant input to the process. And public development banks, of course, they're not the government, but they are public. They are following public guidance, so they can play a very specific role, liaising with local actors within public policies. So I invite you also to leverage this platform and these institutions.
Thank you so much. I think it was a very interesting dialogue. We don't have time now for more questions. We are already over time, and I think outside the room you'll have opportunity to bilaterally discuss a very, very interesting, and you got a good flavor from different panel members on especially what is the importance of the innovative financing, how the approaches have changed, and specifically if you see in this region, with conflicts all around the region, the needs are so high in terms of reconstruction of Syria, reconstruction of Palestine, reconstruction of Yemen, reconstruction of Lebanon. With limited resources, these innovative or catalytic finances play a really good role in terms of leveraging and bringing a lot more money to the table. And these countries have 2 to 4 hours of electricity and once a week of water. So from that perspective, I think overall this discussion was very, in terms of targeted towards the new approach, and especially congratulations to Qatar Fund for Development on hosting this and bringing this dialogue. I think this is just the beginning, and hopefully we'll be able to do a lot more. Thank you so much, and thanks for your participation. Thank you.